Hey guys, welcome back to Sky Talks Trading. My name is Sky and I am on a quest to invest. And today's video is all about ATER stock. First off, you know the deal, guys. I'm not a financial advisor. This is just my opinions. I think that ATER stock is definitely a very interesting play. Now, I know a lot of people put down its appeal solely due to its status as a short squeeze play. And whilst, yeah, the short squeeze aspect definitely comes into it, I'm going to be going into a few other reasons why I think this is actually a very good purchase. So ATERIAN, formerly known as Mohawk Group, uses artificial intelligence and machine learning to power its e-commerce platform. So this is definitely an up-and-coming arena, and I think that is definitely something that makes it an interesting play. It has generated solid revenue growth in recent years. So let's talk a little bit about price action first. Like I say, earlier this month, short selling was the main driver of Ater Stock. During that period, the shares hopped up from around $7.40 per share to as much as $19.10 per share. And since then, the shares have tumbled back down to around $10 per share. So anyone who got in a little bit too late on that short squeeze play might be feeling a little bit burnt. I don't think the squeeze is over for ATERIAN. As of September 15th, around 19.5% of its outstanding float was held by short sellers. But as its short volume has remained high in recent days, more of the smart money looks to be doubling down on their shorting of the name. So basically, it continues to have real potential for a short squeeze. Also, it's worth pointing out that Fidelity has no shares available to short. They've already been sold. So yeah, shorts better watch out when this runs up, because it'll move fast with such a low float and high short percentage as they all cover. So definitely the short squeeze play is still a big aspect. When it comes to news, ATERIAN announced the beta launch of their affiliate platform Deal Mojo. And Deal Mojo connects publishers, content creators, and influencers, aka affiliates, with leading Amazon sellers who offer bonus commissions to the affiliates, which I think is very cool, because if you've been doing Amazon affiliates, you know that the commissions have been getting steadily lower, but it's such a high converting, it's Amazon, so it does convert really well. So anything to kind of boost those commissions would definitely be very attractive and do very well. So yeah, the company has significant organic sales growth, which has only been accelerated by the company's buy and build strategy of e-commerce brands and products. ATERIAN was actually one of the first companies to apply this strategy in this niche, and now other companies have followed suit, such as Thrasio. They're doing the same. So in case you don't know, buy and build is typically used by private equity funds because it offers very attractive returns. So these buy and build M&A creates value in two ways. You've got multiple arbitrage and higher margins. ATERIAN acquires smaller companies at low multiples, lower than ATERIAN's, and there is significant cost-cutting opportunity after the acquisition, so meaning less personnel and back-end integration. And the company will become profitable this year, which will enable them to use their cash flows and debt for M&A instead of diluting stock offerings. There is some short-term uncertainty, but I think there's definite significant upside potential to the short to mid-term. I'm talking like 12 to 18 months due to share price appreciation and potential shorts that have to cover. The company raised money from institutional investors at $15 in June, so this could be considered a floor, I suppose. Many well-respected analysts put price targets on ATERIAN of $42 to $50 in 12 to 18 months. So Brian Nagel with a price target of $50 and Tom Forte with a price target of $42. I mean, I think investors would be happy with either of those price targets. So like I say, company growth is extraordinary, with a lot of room for more growth in the form of new products and also new channels, other marketplaces and DTC and other places as well, other countries. ATERIAN is now also listing products on Walmart, Wayfair, etc. The company has significantly increased their margins earlier this year. So in Q1 2021, they increased gross margins by 14 14% to 54% and contribution margin by 15% to 13%. The company has a healthy pipeline of M&A targets as indicated in their Q1 2021 earnings call. They have an M&A pipeline of potential targets and TTM net revenue of $613 million and TTM EBITDA of $91 million. That's according to the Q1 earnings. So this is very attractive for its buy and build strategy. They are also in discussion with investment banks to attract cheaper debt to improve the cost of capital for their accelerated M&A strategy. They also developed Amy trademark, which is a tool that enables customers to scale thousands of SKUs across the world's largest e-commerce channels. It basically automates marketing and pricing, increasing the unit economics. Amy has only been recently launched, but it could drive significant future revenues. I think right now, Ater stock is a real bargain. Just keep in mind that the stock is highly volatile and the ride could be quite bumpy, so it might not be for the faint of heart. Let me know what you guys think of this stock down in the comments below. So that is all for today, guys. Thank you so much for listening. And as always, have a great day and we'll talk to you very soon.